Well, once again, the morning has started off with a tremendous amount of excitement. If you're interested in the stock market, the economy, and Tesla in particular. But let's go ahead and take a look at what's going on. As we get closer and closer to my pre-1010 stock price of 265, we're it's I'm beginning to think that maybe it's a little too frothy. Okay. So I know there are people who think it might get to 300 before 1010, but we're sitting now around 260. There's some resistance in the 262, 263 range. And, it might have a hard time pushing up against my 265, but I think we'll get there. But if we get to 265 and keep going, then the question becomes, is that too much? Is there too much of excitement and anticipation around the event? No, maybe not, because, let's face it, this is a pretty big deal. And maybe it's really should be at 300 or even higher than 300, given that, of course, 3 years ago, we were at 410. All right. So AJ says this morning. He says, look, Tesla crossed the 260 mark this morning pre-market, which is around 260 now. And the stock is now up 3% year to date and 44% from post fourth quarter earnings drop in late January. He says, I was told by a lot of people in January after Tesla's fourth quarter results and earnings call, where Tesla didn't provide any 2024 delivery guidance, that 2024 will be a gap year and the stock is lame. Well, Elon said it would be a gap year, and so that I'm sorry, AJ, but Elon did say it was going to be a trough year between the two big curves. Since then, the stock is up 44%. I explained how their reasoning was flawed, but I was frequently referred to the wisdom of some of Tesla's gurus. I won't mention the two names that he mentions because I still like both of these people. Anyway, he says, I also tried to explain how these accounts lie to their following and provided specific examples of that lying. He got a lot of heat, he says, but a few people woke up. We now look that if your guidance was from these accounts, you missed out. Yeah, I agree that I think that there was reason. Okay, just in general, I'm a buy and hold Tesla kind of guy. Yes, I sometimes play with some parts of the portfolio, but in general, it's just buy and hold. And I think that anybody that's paying attention to this channel knows that the future of Tesla is the future of the greatest company that there's ever been on earth. And the numbers are going to be astronomical, and it's just a matter of time. And the next 18 months is that time. So personally, I'm still holding at these levels, even though I'm in pretty good shape, as many of you are. But I don't think I just all I'm saying this morning is that it's getting a little frothy at this point. Going into 1010, I'm not sure that we're going to stay up at this level all the way to 1010. If we go above these levels, I think there's a pretty good chance there'll be a pullback, and that doesn't even take into account the fact there might be a macro pullback, substantial one, which is what I'm predicting, 10 to 30% on the S&P. So there you go. Anyway, now, if you really want to get the public to pay attention on 1010, I'm going to announce right now for the first time what I think should happen at the show that nobody has suggested. I think this is what they should do. I think that the new invitation that came out, cemented this in my mind. The invitation is robot. Okay. And so even though the show is about a robotic car, there is another robot in Tesla's world. And also, if you might even guess what I'm going to say here, but what I think is that Optimus needs to be there, and both robots, both C3PO Optimus and R2D2 the Cybercab, need to speak. Both of them need to speak, maybe even to one another. I don't know, but they both need to speak. They both need to become these characters, okay? And I think that would change the day I think that would make it the memorable day that Elon Musk is promising. Now, it'll be memorable without that, but if you really want to make it memorable, have both of those products speaking like the characters. Okay. Now, that doesn't mean they can shirk these other three things that they must do. So you're seeing all kinds of people talking about all kinds of headlines. Oh, three things that Tesla must do. I'm going to tell you what the real things are that Tesla must do. The car needs to be special inside and out. They're going to show us a robotaxi. That much we know for 100% sure, or a cybercab, whatever you want to call the vehicle that they're going to make specifically for the cybercab network. It needs to be special inside and out. Now, it doesn't have to be pretty outside or, like, wow, boy, do I want to get in that. It wouldn't hurt. And we've got the talent on board that could certainly do that. But the inside needs to be cool. It needs to be an experience. There needs to be an experiential aspect to it. Number one. Number two, we need a start date for the overall service. We need that so badly. Whether it's 10/11, whether it's 11/1, whether it's 12/1, even if it's 1/1, we need a start date. We need number three, we need the business proposition for the fleet owner. What is their path to profits? If I want to put my car out there, what is my path to profits? How is that part going to work? Those are the three things they need to do if you really want to see the stock go up the next day. All right, this is let's see, from Cantor, the financial house. They have a neutral rating and a 235 price target for 12 months. Since we're at 260 this morning, that seems a little odd. Anyway, their thoughts. We continue to believe Tesla benefits from the future upside of its full self-driving software, plus upcoming robotaxi segment, the introduction of lower price models, a global manufacturing footprint with economies of scale, and the industry's largest charging infrastructure. We also believe Tesla will benefit from an acceleration of AI software, leap-based profits from the medium term to longer term. Separately, we are encouraged by Elon Musk's comment on the 2024 call, in which he discussed that there are a few OEMs interested in licensing FSD, although the company didn't disclose additional details. Lastly, Tesla disclosed that it expects to begin limited production of its Optimus robot by the end of next year, and expects to ramp up production and delivery to outside customers in 2026. All right, so a good call. Shows that they know what they're talking about. But 235 when the stock's at 260, and that's their estimate for 12 months from now. That's nuts. All right. This is Randy Kirk. Hit like, subscribe, notify. You know what to do this morning. What do we got coming up? Yes, as always, we will have Cern Basher. Now, there's a hurricane warning out there in somewhere near his neighborhood. He warned me that it could be, intermittent electricity there. But anyway, we'll see. Hopefully that all goes smoothly. And then we have Bradford Ferguson tonight to help us bring in another good, happy Thursday report at the end of the day. All right. And then Patreon. Don't forget Patreon. Come on, guys. All right. In the week ending September 21, the advanced figure for seasonally adjusted initial claims was 218,000, a decrease of 4,000 from the previous week's revised. It was revised up by 3,000 to 219. Anyway, good news good news for the economy with regard to not so many layoffs. The 4-week moving average was 224. That was a decrease of 3,500 from the previous week. The advanced seasonally adjusted insured unemployment rate was 1.2% for the week ending September 14th. That's unchanged. September 14th, the advanced number for seasonally adjusted insured unemployment during the week came down from 1.834 million. I'm sorry. Let me change that again. There was an increase of 13,000 from the previous week, and then revised, but the previous week was revised down by 8,000. Anyway, overall, you'd have to say that this particular report on a week-to-week basis has been so flat for like 12 months, 14 months. It's unbelievable how flat it's been, and it causes me to wonder, are these numbers real? But Apparently, nobody's really questioning these numbers, but right now that would suggest no further deterioration in the labor market. All right, then from Market Watch, they say here are the numbers. Orders for durable goods were flat in August. Okay, flat in August, the Commerce Department said Thursday. The result was much better than expected because economists had forecast a 3% fall in orders for durable goods, products that are designed to last for at least 3 years. Durable goods orders rose a revised 9.9% in July, up slightly from the prior estimate of a 9.8% gain. So 9.9% last month and flat this month. Okay, a lot. The headline number here has a lot to do with Boeing. Okay, you just have to understand that. Durable goods include aircraft. All right, and so what's happening with Boeing has a big impact on these numbers. But core capital goods, which takes out of that and all the transportation, takes out the cars, takes out Boeing, and takes out defense. That rose 0.2% last month after a 2.2% drop in July. So that would show flat over the 2-month period. And shipments of core goods, which are factored into GDP, rose 0.1% in August. All right, then we have this from Market Maestro giving us an update on all of the other things that happened this morning. So core PCE prices remain stable at 2.8. This is has somehow related to tomorrow's PCE results. I don't know if this is actually predictive and is exactly the same numbers we're going to get tomorrow. I've been confused about that. I haven't been able to find anybody to straighten out what my understanding is. But that is part of this report that comes out today, is that core PCE stable at 2.8. That's still very high, not anywhere close to the 2%. And it's significant in terms of the increase in pricing. But that would be core PCE, all right? Then we've got corporate profits increased by 3.5 year over year. He says seeing corporate profits rise is a positive economic indicator, a good sign for the stock market. Yes. GDP finalized at 3.0, so no change on the GDP number. That was what it was showing the last time. It was expected to maybe come down a little bit. If the economy really is growing at 3%, that is outstanding. I don't see how, unless tech and government and healthcare are just making up for a lot of losses in these other sectors. GDP price index remains stable at 2.5%, indicating that despite economic growth, price pressures aren't too high. Well, 2.5 is but we got the 2.8 on the other one, 2.5 on this one, et cetera. All right. GDP sales at 1.9%, aligned with economic growth rate. Okay, goods orders, non-defense, up 0.2%, a positive signal. Real consumer spending increased by 2.8%. Now, that's what we've been hearing from everywhere, that the consumer is continuing to spend like crazy. It is unsustainable, okay? Strong growth, but it's unsustainable. The consumer is out of money. Certainly the consumer that's under 100,000 in income is out of money. All right, this is from Barron's this morning. Another deep look at the yield curve. This is a little long, but it's another one of these lessons that I'm learning. I'm passing along to you as I'm learning more and more about it. I think this is a very interesting take on what's happening with this bond yield inversion and reinversion. So anyway, bear with me for a minute. The Treasury yield curve is steepening, and that means it's time for investors to start considering notes and bonds over bills. The yield curve is the term used to describe the yield differential between treasuries of different maturities. It can be used to refer to the difference between any time frame, but it usually refers to the 2-year and the 10-year treasury yields. And then we also have this 2-month and 3-month. Different people looking at those for information. Those seem to be the ones everybody pays attention to. After being inverted, when the 2-year yield is higher than the 10-year, for a record stretch over the last 2 years, it disinverted or reinverted, or everybody uses different words. With the 10-year now higher than the 2-year by about 0.23 percentage points, the first time it has closed above the 0.2 percentage point in more than 2 years, much more than 2 years. When the 10-year yield goes up more than the 2-year, it's known as a curve steepener. There's a new word for you. Among the fixed income crowd, and the current steepener has been impressive. The differential has now widened for 6 consecutive days, and the increase 0.723 points over the past 3 months is the fastest since October's bond market scare when it climbed 7.756 points. Most of the steepening has come from the 10-year yield rising, which I mentioned yesterday, rather than the 2 years decline, meaning factors beyond the near term, like the Federal Reserve rate cuts, have been key. Part of this is simply normalization. Yes, with investors demanding more return to lend to the government for the long term. And that's the natural order of things. But the rise in the 10-year yield also seems to reflect the desire to be compensated for the risk of higher inflation in the future. That is a possibility. Market expectations for the average annual inflation over the next 10 years have been rising lately and now stand at their highest rate since August 1st. It is clear that investors are cognizant that swifter normalization increases the risk of an episode of reflation, according to Ian Lingen, U.S. rate strategist from BMO Capital Markets. Okay, talk of the curve might seem academic, but is an important part of the U.S. financial machinery. Rate differentials affect long-term capital investment made by companies, while small banks rely on it as a guide because they borrow at short-term rates and lend at long-term ones. It also helps financial institutions determine the best rates to charge borrowers to balance their. It affects everything. So big companies make decisions about whether they're going to issue stock if they need to raise money, or whether they're going to issue corporate bonds, or whether they're going to go to banks, or just exactly how they're going to finance their short and long-term needs. It's the same on the opposite. So you got Tesla, for instance, and other companies with $30 billion sitting in the bank, how they're going to invest their money. Then it impacts your mortgage, it impacts your car interest rates as these bonds move against one another, short-term and long-term. So for investors, though, it has a downside. With yields rising, owners of 10-year notes are losing money, of course. And with short-term yields falling, money market funds, other owners of treasury bills, and banks that hold reserves at the Fed are now getting paid less on their cash. So say you're old like me and you've got a lot of money in treasuries, well, your treasury valuation, the value of that bond is going down. But also, if you want to put in more money, and you want to earn interest at a very low risk, you're getting a lower rate of return. This article says, we think the uncertainty regarding the interest income effect will weigh on investors' minds as this easing cycle progresses, keeping U.S. Treasury duration, the longer end of the curve, well bid and the yield curve steepening. So this will continue to collapse. You'll end up with the two-year getting higher and higher. Well, comparatively, it will become less expensive to borrow. The yields on the 2-year will become much less than on the 10-year, which is the normal way. And I feel like the 2-month and the 3-month will follow, and that seems to be what's happening. We'll take a look at that in just a second. All right, this is breaking news just before we came on. Oil futures are falling. We'll look at that in 2 seconds here. They're dropping because Saudi Arabia says they're going to abandon their $100 a barrel price target, and they're going to increase production in a bid to take back market share. So they have 3 million barrel a day potential between them and some of the other OPEC and OPEC plus countries. If they all just decide to make as much as they can to get back market share, you're going to see substantial drop in the oil prices. All right, so after all that, what is happening out in the marketplace? Okay, you still got Tesla sitting right at 260, 259.83. It's been bouncing around up and down around this number all morning. It was above 260 for a time. Whoa, whoa. Boy, I don't know why my computer just had this glitch. No, apparently it's like immediate as soon as I turn on that particular app. But boy, Tesla is now underwater at 0.49 down, and the market as a whole is going down rapidly. So wow. Dow Jones is now up 140, but it was up much more than that. Nasdaq up 121. It was up way more than that. And the S&P up 26. Similar. It is also falling. Tesla's now down 92 cents. I mean, this is a rapid. Oh, we've got the Fed. We've got the Fed chairman speaking. Oh yeah, I'll put a note. I'll do a comment. I'll pin a comment at the top and talk about what the Fed chairman might have just said that is just crushing the market right now. Tesla now down over $1. We've got the Mag 7 all down. Well, NVIDIA up a little bit. Apple and Google, okay, mixed. Half down, half up. But everything just dropping like a rock. Maybe we'll see something on the when we go into CNBC here in a minute. There might be a headline showing there. All of ARK Invest was up strongly, all of it now going down like everything else. This is just continuing. Tesla 121. Okay, let's go ahead. These percentages, by the way, but they're changing every second. Dow Jones is up 0.37, NASDAQ up 0.64, S&P up 0.42, but Tesla now down 0.47 at 255. Now down 0.39. I mean, this is just crazy. Okay, let's go ahead and take a look at what is potentially happening here. Okay, we have the bonds up one. Oh, look at that. Another, yeah. The 10-year is up 3.6 additional, 3.817. So I am now completely wrong. I said 3.75 would be it. It closed above 3.75 yesterday and continuing to go up on the 10-year. Some people say it'll go as high as 4. So think about 4 as being a stopping point. You've got the Fed at 4.75 right now. Going above 4 would seem to be crazy, but right now we're sitting at 3.815. In the meantime, the 2-year, though, has increased 5.7. So you see, you've got that continuing widening with the 2-year getting more and more higher and higher. I'm sorry, the 2-year having lower yields against the 10-year, which is the way that it should be. In the meantime, the 3-month is down 0.3 of a basis point, and the 2-month down 1.3%, 1.3 basis points. So you can see this is the way that you would expect things to go. All right, so people are selling the 10-year and buying the 2-month and the 3-month. That is probably what's taking place. All right, so now you've got oil, as mentioned, down $2 on $2.02 on Texas, $1.94 on Brent. That is now, we're back to well under 70 for Texas at 67.75 and still sitting above 70 for Brent at 71.56. That is almost $4 spread with Hezbollah, I guess, maybe causing that to be a little higher than usual. Natural gas down a teeny bit this morning, 0.64 at 262, though, a very solid number for natural gas. Gold up $3.80 at 26888, $2,688.80. Anyway, I'm not sure if it's an all-time high, but it's very close. Silver continuing to run up 1.15% this morning, 32.385. Copper is up also 2.71% at $4.61. Holy mackerel. All those are going up rapidly. Okay, we've got the dollar up against the Japanese yen, 0.18, and up against the euro, 0.206. You've got Bitcoin up 1,530. So assets going up strongly this morning, but not necessarily the equities, which were up and still are up, but have been falling. All right. Bitcoin up, like I said, 1637 to 64.9. So now solidly back in that old range. All right, let's go back. Let's go back and take another look at those equities, though, to see if things have calmed down. There is no headline on CNBC with regard to the Fed chair, but yeah, things have calmed down now. So after the drop, things are flattening out. There's no uptick yet, but things are flattening out. And so I don't know if the Fed chairman says, because I know he was supposed to speak this morning, but there's nothing on the headlines that I can see here. Just taking one more second to see if there's anything at all. No, no headline at all. So maybe the market just had a little hiccup this morning. Certainly Tesla had a hiccup, dropping back to 255. It's pretty funny since I started the commentary by saying we're getting to my number of 265 too fast, and that maybe we're not going to be able to continue to go up that much this fast. I think just too much. It's a little bit too far out there. And then all of a sudden we have the fall off, and it was because of the macro. So super interesting the way things are going this morning. Okay, remember now yesterday, if you didn't watch the show with Hans Nelson, this is super interesting, very techie. You know, he's much more of a techie guy than me. You definitely want to go check that out. I'll put that card. But then I'm also going to put the card from last night. Another techie guy, Nicholas. Nicholas was on last night, and Nick, we had a great conversation. We didn't agree on anything. Well, yeah, we did. We agreed on some things, but we had some, good skirmishes there around where things are going with Tesla, where things are going with FSD, with the robotaxi rollout, all that kind of stuff. Really highly recommend you check that out if you didn't already. I'll put that card up as well. And in the meantime, join us later today with Cern Basher, as long as he's not out fighting hurricanes. In the tradition of the news broadcasters, he might be trying to get some footage out there, pushing into the wind like Geraldo Rivera or something. But anyway, Cern should be on later this morning. And then, of course, Bradford Ferguson for Good News Thursday. Hopefully we've reversed back into the green later in the day. All right, that's all I got for you. It's been great talking to you.